good morning, everyone in Asia, and good evening or good night in North America. I am Bernard Yang of the Asia Bureau of Finance and Economic Research. Welcome to this e-seminar on capital market development, China and Asia. ABF-EL co-organized this with BFI of Chicago and also in collaboration with SAFE at Shanghai Jiaotong and the PBCSF of Tsinghua, as well as the CUHK in Hong Kong and CUHK in Shenzhen. Today, our topic is going bankrupt in China. The lack of an efficient and independent judicial system to treat bankruptcy is an obstacle to economics and financial development. In the last decade, China made a lot of efforts in improving the situation. This is a very important topic. Let me turn to our chair today, Professor Jacopo, the Fuji Bank and Heller Professor of Finance at Chicago Booth and BFI. Jacopo, would you mind to take over? You chair and moderate today's section, please.
Thanks, Bernie. It's great to have today's two speakers as well as a discussant. The paper that going to be presented is called Going Bankrupt in China. That's very nice title, to be honest. So this paper will be joined with Liew, who's also here. During the presentation, etc., you can just type in some Q&As, and I will moderate after the whole session. Jacopo, please.
So, well, thank you so much to the organizers. First of all, thanks to Yueran to stay up late to discuss our paper. This is a great pleasure to present this. Let me jump right into the main motivation of the paper, and Bernard already gave a good introduction of this, so I'm basically repeating a little bit what he just said. So our key motivation here is that bankruptcy institutions can play an important role in financial development, especially if you think about the reallocation of production factors across firms, reallocation of capital and labor from firms that go bankrupt to firms that are still operating in the economy. Now, there are numerous frictions that tend to characterize bankruptcy institutions, especially in emerging markets, courts that tend to be congested, a lack of specialized judges or trustee, and sometimes pro-debtor, pro-worker bias in judicial decisions. Now, what about China? So the first thing that emerged is that we still have scarce empirical evidence on bankruptcy resolution in China, despite the importance of the Chinese economy and how dynamic it is. The second thing that you want to think about is that in the context of China, you might have additional frictions, such as political influence on court decisions. The idea here is that local politicians in particular might have incentives to keep financially distressed firms alive, and this might slow down the reallocation of resources I was describing before and potentially creating zombie firms. So in this paper, we have really two objectives. The first one is to use new data to provide stylized facts on how bankruptcy resolution happens in China in practice. The second is to provide some evidence on how political influence on courts can affect bankruptcy outcomes and the local economy. To do this, we're going to use a new case-level data set that covers 2,815 bankruptcies that were filed in China between 2011 and 2020. We recently updated our data up to December of 2020. And then we're going to exploit a major institutional reform that happened in China in the last decade, which is the introduction of courts specialized in dealing with bankruptcy cases. And by specialization here, I mean, these courts are supposed to have hired better trained judges with a background and training in bankruptcy law, as well as judges that are ideally less subject to political influence. Now, our identification. So we're going to try to identify the effects of specialization on judicial outcomes, and for that, we're going to compare cases that were filed in traditional versus specialized courts located in the same city and filed in the same year. And then to study the effect of specialization on the local economy, we're going to exploit the fact that these courts I was talking about have been introduced in a staggered fashion, meaning they have been introduced in different cities in different years. Let me give you sort of a preview of the main findings. So first of all, we present a set of stylized facts on bankruptcy resolution in China. We have many in the paper. I'm just going to present and discuss a few here in this short talk. Relative to the US, for example, we see that in China, we have a much larger share of liquidations relative to reorganizations. The average time in court of bankruptcy cases that we see in the data is about 1.5 years, which is actually quite good by international standards, although again, 50% longer than what it takes in the US to resolve insolvency. In terms of the effects of specialization on judicial outcomes, we document that specialization leads to faster resolution. How much faster? About 200 days. So 200 less days it takes for specialized courts to deal with insolvency relative to traditional courts, and that's about 36% of the average time that we see in court that we see in cases in our sample. We also find that specialization lead to hiring better trained judges in these courts. Judges in these courts are 27% more likely to be trained in, what we call in the paper elite schools, which are really the most important law schools and the 985 project universities. In terms of independence, judicial independence, of course, it's very challenging to provide evidence on something that is hard to observe. We produce two tests that we think are indicative of this. First, we look at how judges deal with state-owned firms versus private firms. And we find that the introduction of specialized courts lead to a 2 times larger decline in case duration for state-owned firms relative to private firms. And number two, we look at how our results are different depending on the political cycles of local party secretaries. And the idea here being that towards the end of the term of local party secretaries, the incentive of sort of delaying liquidations might be stronger because this is the period in which they might be evaluated for promotion. And what we find here is consistent with this idea of specialization leading to more independence because the effects on case duration are 2 times larger in the last 2 years of the political cycle relative to the first part of the political cycle. And finally, we provide evidence on the effect of specialization on the local economy. Here, this evidence is only suggestive, but it shows that cities that introduce these courts experience a relative decline in the amount of employment in industries that we define as zombie intensive. And I'll explain in a second what that means. And we'll also find a relative increase in firm entry and a relative increase in average productivity. So let me just give you the institutional setting, data, and the main stylized facts first. So in 2007, China introduced a new bankruptcy law. This law is modeled on the US Chapter 7, Chapter 11. So of course, now the new law covers private firms as well as state-owned firms. It strengthened creditor rights protection, especially secured creditors, and introduced a reorganization procedure that wasn't there before. Of course, one thing is the law in the books. One other is the enforcement in practice. Courts tend to be characterized in China as in other countries by lengthy procedures, lack of specialization, especially at the beginning when this law was introduced. In addition, there's this sort of China-specific friction I was mentioning before of potential political influence on local courts to sort of delay liquidations of local firms. Now, in the last decade, in the last 13 years, China has also stepped up and introduced another type of institutional reform, introducing specialized courts, what I was describing before. And China took sort of the usual sort of a gradualistic approach at this type of reforms. You can think of 2 steps here. In the first step, China has introduced 97 specialized tribunals that are think of those as specialized branches of existing courts, specialized in dealing with bankruptcy cases. These 97 tribunals have been introduced between 2007 and 2017. And in the last 2 years, China has also introduced 9. There have been 9 large cities have introduced a new specialized courts. These are like brand new courts that didn't exist before. Of course, these specialized tribunals and courts select often new judges with specialized training that should lead to better judicial decision, a little bit lower political capture, but that's sort of an empirical question. That's what we're trying to understand here. This figure shows you the timing of introduction of these specialized courts over time. You see in blue the specialized tribunals, and in red the new specialized courts at the end of the sample. This clustering in 2015 to 17 comes from a new directive of the Supreme Court that pushed many cities and provinces to introduce these tribunals after 2014. This graph shows you the share of cases that are filed in traditional versus specialized courts over time. The green bar shows the share filed in traditional courts. The orange bar shows the share filed in specialized tribunal. The blue bar, the share filed in specialized courts. And you see after 2014, this shift of cases towards specialized courts. And now we are at about 50 to 60% of cases filed in these specialized venues. This is the source of our data, a new platform that was promoted by the Supreme Court that is called the National Enterprise Bankruptcy Information Disclosure Platform. It's publicly available, so anyone who wants to do research on this can access it. At the moment, this platform covers about 3,000 cases that were filed between 2011 and December of 2020. The data reports the name of the firm, the name of the court, firm characteristics, and then the PDF of court documents. And we did text analysis to extract from these PDFs the relevant dates for each case, the type of case, the judges involved in the case. Now, by no means this platform captures, we think, this is hard to establish, but by no means this platform captures all cases filed in China, all bankruptcy cases filed in China. Our best estimate looking at aggregate statistics is that this platform captures about 10% of total cases, and it tends to be skewed towards the larger ones, the ones where there are positive assets that creditors can hope to recover. There are several selection issues that we discuss in the paper and that we try to address in the empirical analysis. One of the key part of our empirics will be to compare cases that are filed at the same time and in the same year. This is the number of bankruptcy cases reported in the platform between 2011 and 2020. We recently re-extracted the data, including 2020. You can see no jump in cases in 2020 despite COVID. That's actually, very similar to what has happened also in the US. In the US, actually, bankruptcy cases have declined in 2020.
Jacopo, may I just that will be useful coming from Bernie, which I agree, that provide a little bit more background for what's called specialized. It seems like a very special about the specialized. So can you give us a little bit?
Yeah, absolutely. So the idea was to create branches of the judiciaries whose judges had previous knowledge and specialized knowledge of the bankruptcy code, and sort of training, the training that is necessary to deal with the bankruptcy cases. We all know that these cases tend to be quite complex. They require judges to be able to read balance sheet, to decide whether a company is viable or not, administer relationship with creditors that have different needs. And so by specialization here, I mean judicial venue where the judges put in charge have this type of training, have an understanding, can read the balance sheet, can deal with this type of complex cases. Now, whether this actually happened in practice and whether the introduction of this specialization actually led to any effective change in judicial outcomes, if you will, is a little bit part of the research question here, in the sense that this could be just a label and then everything sort of continues as it was before. It turns out, that's not the case in this specific instance. I hope that helps.
Jacopo,
yes, Bernard, go ahead.
A bit more, please. Like, what's the difference between the old and the new specialized court?
So before the introduction of these courts, bankruptcy cases were filed and dealt with by normal civil courts. Okay, so the judges that would deal with these cases were not only dealing with these bankruptcy cases, but also with any other civil case that would enter the court. Now, as I said before, there are two types of specialized courts. In the first step, if you will, of this reform was the introduction of specialized tribunals these tribunals are really just a branch of an existing court that now only deals with bankruptcy cases. The specialized courts that have been introduced in the last 2 years are instead like brand new courts that just have been created with the objective of dealing with bankruptcy cases in mostly in large industrialized cities. And so the 9 instances I was mentioning before. Hope this helps. Can I move forward? And I'm happy to get more questions at the end, of course, and then clarify any point that is not clear. We were also interested, of course, in sort of understanding the geography of this. We collected data on the coordinates of all firms and courts reported in the data set. You can see here on the left the location of the courts. The red ones are the traditional civil courts that I was describing now. The green dots are this green captures both courts with a specialized tribunal attached or specialized courts. The black dots on the right instead are the companies that in our data filed for bankruptcy during these 10 years. These are some case characteristics from our sample. Just very briefly, as I said at the beginning, in terms of case type, 83% of our cases are liquidations. Most firms that file for bankruptcy here are firms that have at most 49, below 50 employees. 93.6% of firms in our data are private firms. And in terms of sectors, the most represented ones are manufacturing, construction, and real estate. Again, consistent with this idea that these are larger cases with more sort of tangible assets that can be, sold and used to repay creditors. This is the time variation in the case and firm characteristic I just described. Let me just emphasize in panel B, for example, this is the share of cases by firm size. You see over time this increase in smaller firms filed for bankruptcy. In panel C, you see the composition by sector. And here you see over time an increase in cases from the construction and real estate sector and a relative decline in manufacturing cases. Although to be fair, there is also a large category of firms for which we do not know to which sector they belong. And the last panel, panel D, shows you the evolution of the share of cases of state-owned firms versus non-state-owned firms. And also as well here, you see this clear trend of sort of a decline in the share of state-owned firms filing for bankruptcy over time. This is the distribution of time in court. So this graph shows you the time in years. And as I said at the beginning, the average is 1.5 years, but it varies really from a few months to up to 8 years. This is if you split the sample between specialized and non-specialized courts, you see this stark difference. But of course, this could just be driven by selection and there's no causal evidence here. So let me describe very briefly the empirical strategy that we have in mind. So the main challenge, of course, is the endogeneity in the introduction of these courts. A city that introduce specialized courts might be different than those that don't. And for example, it might be on a different economic cycle, might be affected by different economic shocks that select the type of firms that enter into bankruptcy. We're going to exploit here the fact that these specialized courts tend to coexist in the same city with traditional courts. And this is what this graph shows you. This graph shows you the share of cases allocated to specialized courts around the quarter in which they were introduced. And you see that, of course, this share is 0 up to the time in which the first court is introduced in a given city and then becomes something between 50 and 60%. So what we end up doing is compare cases that are filed in different courts, but within the same city and in the same year. So this is going to be an outcome Y for case I, court C, city J, year T, and this alpha JT that I'm underlying in red is a city time fixed effects that should capture any sort of city level shock here in across cases. The coefficient of interest is beta, which captures a court that has introduced is equal to 1 when a court introduces a specialized tribunal and it's 0 before. Still, it remains the question, what drives allocation of cases within a city between specialized and non-specialized courts? And this is something we have been pushed also by referee to sort of try to understand better, and we've tried to work on this. And this is my favorite. So the one thing we're trying to look at is the geography of this allocation. And this is a visual example that from our data that shows the prefecture-level cities of Suzhou and Shanghai. And the black dots, again, are companies. The red dots are traditional courts, the green dots are specialized courts. And what you see here in this blue line capture where each firm files, you see a clear geographical pattern. Firms tend to file in courts that are in the same within the boundaries of a given county, and if not there, if anything, to the closest court. And we test these more formally with the data. And here, what I want to take home is the coefficient in column 2 that tells you that cases are 52% more likely to be filed in the closest court, the closest geographical court. And column 4 tells you that's independent from whether that court is specialized or not. So geographical distance here really seem to have very high predictive power. Now, of course, we go through all this trouble and we try to understand this because we are worried about selection of cases. We're worried that cases that go to specialized court are kind of different in other dimensions. If you look at observables, these cases are actually quite comparable in terms of the ownership of the firm, the type of reorganization, if it's a reorganization or a liquidation, the size of the firm, and the sector. And with size, you see that larger firms tend to file to specialized courts, and that is something that you see in these coefficients. We will nonetheless however, add these as controls in all our regressions. So in the last minutes I have, let me go a little bit through the main results. So the first main result is about time in court. Again, we're running a case level specification where days in court is our main outcome on the left-hand side. This is, case I, court C, city J, time T. And I really want you just to focus on the last column, column 5. Column 5 tells you that cases dealt with by specialized court are resolved 193 days faster than those filed in traditional courts in the same city, in the same year, of firms that are in the same sector and of the same size category. This 193 days difference is about 36% of the average in our sample. So this is quite a substantial increase in efficiency. Result number 2 about judge education. So the effect of specialization leads to higher educated judges in these courts. Judges in specialized courts are 27% more likely to have been trained in an elite school. These elite schools include the top 5 law schools and Project 1985 universities. And finally, let me discuss our results on political influence. Does specialization increase judicial independence? This is, of course, extremely challenging. Measuring independence is extremely challenging. We propose 2 tests that we think are indicative of these differences. First of all, we look at differences in judicial treatment of state-owned firms versus private firms. The idea here is that party officials might have a higher incentive to delay the liquidation of state-owned firms because they are more labor intensive, they are larger, they're more politically sensitive. The second test is to look at the different effects of specialization across the term of local politicians. And the idea here is that the incentive to delay cases might be larger in late years of the local party secretary's term. These are the results on these. Let me just emphasize, if you look at column 1 basically tells you the following. In traditional courts, the time that it takes to resolve insolvency was very similar for state-owned firms and private firms. If anything, it took longer to deal with state-owned firms. When you introduce specialized courts, this time declines twice as fast for state-owned firms than for private firms. Columns 3 and 5 tell you that our effects on time in court are 2 times larger in the late years of party secretary's term, consistent with this idea that these are the years in which this political influence can be strong. The last set of results is about city level outcomes, and I will be extremely brief and conclude. We also want to look at city level effects of the introduction of these courts. This specification will simply rely on the staggered introduction of courts across cities. Of course, the main challenge here is endogenous timing, and we do our best to check if economic trends can explain the timing of introduction. We analyze pre-trends. Still, we think of this evidence as only suggestive. What do we find? We find that cities that introduce these specialized tribunals tend to experience a relative reduction in employment in sectors that we define as sectors with a higher diffusion of zombie firms. Zombie firms are defined as in the literature, Caballero et al., low productivity firms that pay interest that are not justified by their fundamentals. We also find larger firm entry, higher average productivity in these cities. I think my time is basically up, so these are our pre-trends, but let me just give you my brief sort of concluding remarks on this. I think that bankruptcy, having done quite a bit of work on bankruptcy over the last years, I really think that these bankruptcy institutions can be, key for financial and economic development. They are characterized by frictions in most countries. Congested courts, lack of training, they're often the same. In the context of China is extremely interesting because it's very dynamic in terms of both the reforms that have been introduced in the books, but also in practice what has happened to court enforcement. But it's also interesting because of other frictions that can be at place, like this political influence. Now, what are the two take-home points from this paper? I think the first one is that we try to do a first step in our understanding of what bankruptcy resolution looks like in China. This is an area that was so far unexplored due to the lack of data. And number two, we try to provide some evidence. Well, I think our evidence indicates that specialization can attenuate existing frictions, similar to findings that have been documented in other countries, think about India, but also that can also attenuate political influence. So sort of this more China-specific friction here. And I want to thank you very much. Thanks to the organizers. Thank you, Yueran, and thank Bo, of course, my co-author in this work.
All right, thank you. Yueran Ma from the booth to discuss this paper.
Thanks for having me. It's a great pleasure to discuss this thought-provoking paper on a very important topic. And given the objectives of both ABFER and BFI China, I think I will start by talking about some general thoughts about bankruptcy, because I think we want to also discuss some high-level issues through the platforms of specific papers, and then I will provide comments for this paper. So in terms of the general thoughts, first and foremost, to echo what Jacopo already said, institutions for bankruptcy are extremely important. They have wide-ranging implications for issues and key topics in both finance and macroeconomics. They are fundamental for understanding financial contracts, especially debt. And as Jacopo mentioned, they're also very important for financial development, credit availability, and possibly credit cycles and business cycles as well. And admittedly, bankruptcy institutions are also very complicated. They weave together many things, including law and accounting and finance and taxation and potentially also politics. And in part because bankruptcy systems are very complicated, they perform poorly in many countries, as Jacopo also mentioned, and I will visualize that using some measurement from prior work. And it's also well recognized that well-functioning bankruptcy institutions depend not just on the laws, the legal statutes that you write down, but implementation is crucial. And indeed, bankruptcy relies on a large ecosystem. So I think it is very interesting and important that this paper studies a reform, not just a reform, not about the laws that are written, but about the implementation through the court system. And finally, for the discussion to make more sense, it also helps to bear in mind what are the key objectives of the legal institutions for bankruptcy. Why do we need courts to begin with? What is the deviation from codes that private renegotiation is not sufficient by itself? And what the reforms ultimately want to achieve. So starting with the importance of bankruptcy, just to elaborate a little bit more what Jacopo alluded to. So first of all, bankruptcy systems have important impact for the ex-post outcomes. For example, for contract enforcement, investor protection, and also for a wise allocation of resources. That for viable firms in financial distress, we want to keep them alive, restructure their balance sheets, and alleviate financial distress. Whereas for non-viable firms in economic distress, they should probably be liquidated and the resources reallocated to support other firms. And of course, what happens ex post can have profound implications for ex ante outcomes. So for example, what types of contracts, what types of rights can be enforced is a key determinant of what contracts can rely on ex ante. For debt contracts, as an example, in ancient times where very little things can be enforced, debt capacity for firms is very limited. And then with the development of property rights and enforcement of property rights, firms can borrow against things like real estate. And then ultimately with the development of verifiability and contractability of cash flows, firms can then borrow against, for example, their cash flows in the United States. In addition, for the reallocation of resources and a wise reallocation can affect creative destruction and the dynamics of the economic system and the vibrance of the economic system. The importance of bankruptcy institutions is, I think, sometimes more salient in recessions, and many bankruptcy reforms are prompted by recessions. Japan is one of the examples. In the 80s and 90s, Japan at the time did not have a well-functioning bankruptcy system. There were very few formal bankruptcy filings. And then the collapse of the real estate market led to a lot of bad debt needs to be resolved, and firms had trouble borrowing. And that led to a major reform in the late 90s and early 2000s. And now Japan has a bankruptcy system that's reasonably well-functioning, and the bankruptcy filing rates also become quite comparable to other advanced countries, whereas before the reform, very few firms went through the formal bankruptcy courts, and which may have contributed to the high reliance on bank and the high reliance on real estate in the first place. And despite the importance of bankruptcy institutions, it is well recognized that they perform poorly in many countries. So in early 2000s, Dienkov, McLeish, Hart, and Schleifer went around to measure the performance of bankruptcy systems in about 88 countries around the world. And the way they do that to make things uniform is they presented legal professionals in each country with the same example case, which is a hotel in financial distress, a rather simple case. The hotel has a bank creditor. It is worth 100 as a going concern, that is as an operating business, and 70 if liquidated piecemeal. And the finance professionals and legal professionals in each country are asked to assess what the most likely resolution scenario would be, how long it would take, what is the value of the business in the end, and the cost and so on. And so here's a plot from their data. The blue dots represent the countries where the company can be kept as an operating business. The red dots represent the countries where the company would die and get liquidated. And the y-axis is the total recovery, the value of the business in the end. The x-axis is how long it takes to resolve this rather simple case with one main creditor and very simple financial structure. So we see that for some countries, they handle this case reasonably well. US is one of the blue dots high up here. China is in the middle of the pack, which is this diamond. Its recovery is about the median level. It takes about 2 years. It's going to liquidate the company. Well, the bankruptcy law in China has evolved over time, and the implementation has also evolved over time. But even the latest World Bank data in 2020 still ranks China about around 50 out of all countries in terms of bankruptcy resolution. So there's still a long way to go. And one important issue, I think, very important to recognize is that well-functioning bankruptcy systems require not just the legal statutes. This is not just a feature of developing countries. Even for the US and for advanced economies, that's also crucial. So many countries, including France and Germany, have reformed their bankruptcy laws, for example, introducing reorganization chapters, and had very little effects. Those new laws were very little used, for example, because the courts lagged behind and the judges didn't have experience and knowledge to implement the laws. Even in the US, the recent work by Everson et al. Show that judges' experience on the court, on the bench, is very important for case outcomes. And other reflection in the US is, for example, for the large Chapter 11 filings, which are more complicated, they concentrate in Southern District of New York and Delaware, in part because firms try to find their ways to file in these places because they're more experienced, they know the secret of the trade. So it is quite important to recognize the value of this paper to study the impact of reforms of courts, not just reforms of statutes, which are the more commonly coded reforms, for example, in the World Bank database. And finally, to wrap up the general discussion, I think it is important to think about what's the objective of bankruptcy institutions and bankruptcy reforms. So first of all, though the word bankruptcy or bankrupt is often colloquially used to refer to failing businesses, bankruptcy as an institution is not the same as business failure. So first of all, business failure does not imply bankruptcy. Many unsuccessful businesses just shut down, and bankruptcy needs a petition to start. Business failure does not, and there's nothing that bankruptcy can do if you just have a lousy business idea. Conversely, bankruptcy also does not necessarily have to imply business failure. Many businesses, for example, in the US, go through bankruptcy to restructure their balance sheets and continue their operation and hopefully emerge stronger. And the title of Gilson's famous textbook on bankruptcy is Creating Value Through Corporate Restructuring. So why is it about creating value? Well, bankruptcy is often viewed as a legal process to resolve financial distress. So hopefully through the resolution of financial distress, you can create value. And this requires the support of courts because private negotiations can face many frictions and Cole's theorem does not always hold. In a summary by Smith and Stromberg in 2004, they identified several key roles of bankruptcy. And I also want to bear in mind these key roles when we evaluate the China reform and see along which dimensions they can improve after the reform. So first of all is to verify assets and liabilities. Second is to improve coordination among different claim holders and address collective action problems. Third is to protect claimants and detect fraud. Fourth is to maximize the value of businesses and their assets. And the final one is to alleviate the impact of liquidity constraints. Someone asked in the chat whether companies can still get financing after filing for bankruptcy. Not the case in China, but that is a crucial component of the bankruptcy code in the US to provide liquidity and financing for firms that file for bankruptcy protection. So all these aspects rely not just on laws, but on implementation. Although it's not exactly easy to pinpoint which aspect became better after the China reform, I will revisit these 5 aspects as we talk through the China reforms. So the last thing I want to talk about, what's not explicitly on the Smith and Stromberg list, is the recognition that through the resolution of financial distress, we want to preserve firms that are viable businesses. And the key tenet of US bankruptcy design is the recognition that many firms are worth more as an operating business than liquidated. In some recent work I have with Amir Kermani, we try to measure for the major US Chapter 11 cases, what's the size of the going concern value when the business is alive relative to the liquidation value if you liquidate the business. And the median ratio is 2. That's reasonably high, but that's also in part a reflection that the US reorganization system works reasonably well, so you can preserve this much going concern value. This also means that in the ideal case, bankruptcy institutions, again, to resolve financial distress should aim to be hospitals, not funeral homes. And bankruptcy does not even have to be equivalent to insolvency. In the US, you do not need to prove that the business is insolvent to file for bankruptcy. It is designed that way to encourage preemptive restructuring. So that's my general thoughts on bankruptcy, that it is important, it is difficult, it is not just about the laws, and it has several important economic objectives. Now let's come to the China reform, which created these specialized courts. Bernie asked what specialization means. It means that the court has judges that were trained in elite law schools, but also with specialized knowledge in bankruptcy. It's not easy to learn this trade, and also potentially more judicial independence. The main effects the paper finds includes a reduction in duration. That's a very central outcome measured in this paper, and also a reduction in the inefficient resolution of state-owned enterprises. They also find that cities where these new courts are introduced, they have less employment in zombie industries and more firm entry. So I think these outcomes indicate progress, at least in improving coordination among creditors and reducing administrative costs. But I'm also curious, like many people asked in the chat, about other metrics for evaluating this reform. So first of all, I emphasize that in an ideal setting, we want to do well in preserving the viable firms. So I wonder if there's enough data to measure the extent to which, for example, reorganizations succeed. Do they succeed with a higher rate in the new courts? Is there more survival for firms that are valuable to save? For example, firms that are profitable, if you can observe their balance sheets, or firms with lower liquidation values, or at least in those industries. In addition, there are other dimensions that can be relevant. For example, protection of investors, resolution of fraud. They may not be straightforward to measure, but to the extent there's some measurement, that would also be helpful. On a similar note, there can be heterogeneous treatment effects for firms of different sizes and different industries. Larger firms and firms in certain industries can be more challenging to handle, and to the extent that more experienced judges or more knowledgeable judges can handle things better, maybe that will show up even more strongly for these difficult cases.
Yueran, just in time, 3 minutes.
Yeah. So now, in my clock, it shows up 5, but I will finish quickly. So another aspect of bankruptcy reform is for poorly performing bankruptcy systems. Oftentimes, firms just do not file in the courts. I wonder if the filing rates increase after you introduce new courts. And also, do the new courts improve ex-ante financing availability in the area? Do firms choose to locate closer to the new courts? The second set of comments is about the zombie firms. I see the definition of zombies have 2 aspects to them. I wonder whether receiving subsidized financing is necessarily important, because what you want to detect is industries that are going through economic distress, and you do not want many firms to be in those industries. That is kind of not the same as the receiving subsidized financing. And also, why do zombie firms not exit without formal bankruptcy? So what does bankruptcy court do to reduce, for example, banks' propensity to evergreen loans to zombie firms? If that is present, then why is that the case? Why is the formal bankruptcy system important for getting rid of zombies? The final comment is the paper says that the new courts and the old courts, the main difference of firms that go to these courts is how close they are to the courts. In contrast, it is often thought that firms discretionarily choosing the better courts can be a good thing. It can improve competition. It can allow firms to use the better courts. In the US, firms gravitate towards more experienced courts. International firms also utilize Chapter 11 by forum shopping through their US subsidiaries. So maybe in the end, forum shopping can be a feature rather than a bug. So just to summarize, the legal institutions for bankruptcy have wide-ranging implications, as we already discussed many times. It will be great if this paper can help us understand a wider set of outcomes of their implications in terms of both ex-post outcomes and ex-ante outcomes. So analyze more outcomes if possible, but I recognize the paper is already quite mature. In the last 2 minutes, I want to just briefly mention what else in China we could do to improve the bankruptcy institutions. There is a large ecosystem for bankruptcy resolution. There's also creditor sophistication. Their bankruptcy institutions also rely on non-bankruptcy institutions. And the last thing I will say is the view of bankruptcy can also be important. It ideally should be viewed as a tool, not a stigma. And I feel that the word bankrupt has negative connotations. So for the title, Zhigu thought at the beginning the title is great. But I thought if I were to write the paper, I might highlight something like bankruptcy reforms beyond statutes, evidence from China. I know it's not the only paper that analyzes such reforms, but I think this reform is very focused on courts beyond the legal statutes, and that's quite valuable. And similarly, for the phrase going bankrupt, because it's so commonly interpreted as business failure, I might prefer to use the term filing for bankruptcy instead. So that's it. Apologies for the technical difficulty at the beginning, and thanks again for having me.
Thanks. Yueran, please keep this. Can you share your screen again? I'm going to use my privilege of the chair to first ask the first question. Can you share your slides again? Go to the Stromberg paper that on the go back where you have 5 bullet points. Yeah. So I would like to ask the authors, when you read all these very complicated documents, at some point I was trying to read them. By the way, these data are really public available. Just that Chinese is much harder to do this word processing standard AI stuff. I want to ask the authors that which part do you think that this specialized court tribunal or whatever it's called, and the specialized court, which aspect that are really improved on this reform is improving the process, increase the efficiency.
Perfect. Thank you, Zhigu. And before we answer, let me just thank Yueran for the great discussion, the sort of placing this paper in the literature. I totally with you on all the the first 5 points that you mentioned, and thanks a lot for the suggestions on the paper. I have some answers to your points. I don't know if I should maybe start from Zhigu in the audience and or start from Yueran points. Very briefly, let me start with Zhigu's point, and then I'll go back to Yueran's comments. Given that we are on this slide now, and Bo, feel free to sort of help me in this. But my sense, Zhigu, if I look at these 5 points, is that specialization clearly make these judges better able to assess the value of the assets, to understand what these liabilities on these firms. I would definitely say point 1. I would say maximizing the value of the business and assets is also point 4 is part of why they try to sell these firms as quickly as possible, or the assets of this firm as quickly as possible. So that's also part of what's happening here. And I think these courts were also better able to coordinate claims from different types of aggregate claims from different types of claimants. I think both, maybe we have some details on this that if you want to share, but I think there is some also sort of technological advances here that made possible for these courts to better aggregate claims from different claimants. Let me also.
Do you see any example where they protect claimants? Like, I thought that most of the time that people always thought that if you are underprivileged, then you can, before the specialized court, you're always being discriminated.
So protect claimants, you have in mind violation of absolute priorities.
Yes, those things. Yes.
I don't think so. So we haven't specifically looked at violation of absolute priority in these documents. Okay. I think there is a clear ranking, and I think it would be possible to create that type of index. Yeah. We have not looked at that.
Okay.
Can I add some points? I think when we started this project, we started by going through those cases. I think we are thinking in the shoes of judges. How are they going to rule over these cases? Our understanding is, especially after introduction of these courts, we see more like in the better assessment about assets and liabilities. I think this is like we do not see so much from the civil court in the past, where in the civil court, we see different cases, like from divorces to labor dispute and etc. Where the judges in China, they are mostly they do not have legal expertise. I think we understand. So bankruptcy is very different, where you need to have a good assessment on the assets and the liability, and then who should we redistribute those assets and those liability, those assets to different secured versus unsecured creditors. Yeah. So certainly there are other channels, especially as coordination among claimant holders. So when we read through these files, we see their improvement as well. Yeah.
Okay, so Jacopo, please quickly, respond to Yueran's point.
Yeah,
and then
very quickly.
I would like to leave like at least 5 minutes for the.
I'll take 1 minute. Just
Okay.
Thank you for your list of sort of additional evidence that you requested. Some of the things you have asked, we have tried. In some of them, we don't have enough power to test. One thing we did test is the increase in filing rates, and we do see some evidence on that, which is also, related to your point on what is the exact mechanism through which these specialized courts might lead to a decline in sort of employment in zombie industries. In terms of allocation, why there's not more forum shopping, why don't we see firms sort of picking the best court within a given location? That is actually something that for which I don't have a good answer, in the sense that if you look at the law, Article 3 says that these firms should file in the court of the prefecture-level city where they are located. So I think there is some leeway for them to sort of do this type of forum shopping. We don't see that happening in practice. And that is something that, either there's something about the law that we're missing, or there is just not happening. In terms of, how this ex post efficiency translate in ex ante better outcomes, I would love to be able to, do this type of test on interest rates and other ex ante outcomes, access to finance, etc. At the moment, we don't have the data to look at that, but I hope at some point soon we'll. Or maybe another paper, maybe somebody that has access to that type of data we don't, will be able to test this. And I'm sure I might have left some of your points, but I hope I'm sure we'll go through your slides. This is fantastic. Yeah.
Thank you. So now there's some time to ask some questions. Daryl, I thought that you have a fantastic question to ask.
Well, thanks, Bernie. Fantastic paper and fantastic discussion. So I was going to ask if there's any endogeneity on where the specialized courts are located within a city. Since there's no forum shopping, there could be a strategic location of these courts that might cause a selection effect. I also wanted to follow up on Randall Mork's really good line of questioning regarding the metrics for performance. Jacopo brought up absolute priority. With respect to state-owned enterprises, is there evidence that state-owned enterprises are getting better priority when a specialized court, when a non-specialized court is used than when a specialized court is used? I wasn't entirely convinced by time in bankruptcy, because a state a heavily state-owned and influenced company could go through bankruptcy in 25 minutes if there's a very, very strong relationship that says all the assets are going to one claimant. Sorry for the long question.
Thank you, Darren. No, this is great. On the endogeneity of openings within a city, that is something that we're trying to, we're collecting data on at the county level to see whether, of course, these openings reflect some underlying observable characteristics that can help us understand why, this area and not another one. I would have suspected that that type of endogeneity would translate into differences also in firm characteristics. For example, now you would expect that if these are located in more central areas or around manufacturing clusters, you would expect also to find this difference reflected in sectoral differences or in size differences. And we actually do see some of that, as we don't have a lot of data, so we always have power issues. But if you actually look at the point estimates on the size dummies, you see that they are sort of monotonically increasing those point estimates are monotonically increasing with size when you try to explain whether you go to a specialized court. So that, to me, as MELD test, is a first indication that there is potentially here some strategic location around areas where these larger firms or larger industrial clusters are. So this is about your first point. Your second point about SOE, I am as frustrated as I think many people in the audience in just looking at one outcome, basically, which is time in court and a judge's education and others. But this to some extent comes from the fact that these court documents where you can start extracting other outcomes, they are often not available or not as rich for all the cases we have. Time in court is something we can consistently build for all the cases that are there, and that is why we're starting from that. Violation of absolute priority to state-owned firms. I mean, all the things that you guys are mentioning, it's something that is in the back of our mind. It is very hard when because these documents, as you can imagine, they're quite messy. They're not structured in every case in the same way. In some cases, some of them are completely missing. So here we're working with what is sort of consistently reported across cases. But I am fully with you guys and wanting to know more, and that of course would require maybe working with much smaller samples. But it's something that we can definitely try to do.
Okay. Michael.
Yes. Thanks a lot, for presenting this very important paper. My question is a bit on the technical side. Say that I want to know is it possible to see the selection of those bankruptcy cases by looking into the complexity of those cases. So bankruptcy cases are probably the most complicated economic cases. But what I learned from my conversations with my lawyer friends in China, most economic cases in China are kind of super simple. Most cases are just like, I owe you money, but I do not want to pay you. So that's why you want to file a case against me. Even if you want to do a little bit more, then in most cases, you will be unable to do it in courts. So in most cases, kind of complicated legal cases, basically, they just get resolved outside courts. So if you think about, say that the introduction of those specialized courts or specialized tribunals actually helps the legal system to handle those complicated bankruptcy cases, then the complexity, if you do some kind of AI thing, come up with a measure of complexity of those bankruptcy cases, you may see actually those cases, those new courts are dealing with actually increasing. And then the effect on duration is actually more amazing because, they are dealing with more complicated cases. People have more incentive to file a case to the legal system, and then the duration is even shorter. So I want to know if it's possible to actually look at this thing.
Yeah, no, that's great.
Jacopo, please just hold on. Given time, Bernie, then you also ask a question, and then Jacopo can answer both.
Yes, I would like to ask a very generic question, maybe quite simple-minded. my impression is that in China, the party and the state's preference dominate other preferences. And so in a situation where the business is having some stress, what would be the state's preference, how it would affect its direction to the courts in treating with bankruptcy, and then how it would affect filing of bankruptcy.
Okay, so Jigo, do I have a minute to?
Yeah, please.
Okay. So Michael, so
2 minutes.
2 minutes, fantastic. Okay, so great point about the degree of complexity. I think so. At the moment, our proxy of complexity is just size of the firm. At least that's the way we described it in the paper. But it's of course like very limited. I can think of other. We can think of number of claimants. Or other, number of documents, or number of appeals, or other sort of judicial steps that have to be taken in each case. I think I get your, I see your point. It is something that we can think about building a proxy, and I'm with you in thinking of these as sort of making even more striking the duration result, because there's always a trade-off, quality versus quantity in a way, right? I mean, in a way, if you're dealing with more complex cases, you could also expect like a no result in terms of timing would have made sense if these courts are dealing with like complex cases that require more time. I need to think about maybe more in detail how exactly to build this index of complexity. The fact that within a city, largest firms tend to be filing in these specialized courts, this is related to Darrell's point as well, suggests to me that there is some of this sort of allocation based on complexity within a given location. Bernie, I'm not sure I actually got exactly the gist of your question. So you're saying what would be the optimal allocation of, what would be the optimal decision of the state in terms of,
my real point is that in the case of China, the party really tell the court a lot on how and what to treat in how they would interpret the law and deal with bankruptcies and so on. I want to know what is the party's preference. Supposedly they want stability, but would it mean that they give special weight to some dimensions, and how would therefore they would direct the court in making decisions? And since we expect this kind of outcome, so what kind of distortion that will happen in our bankruptcy considerations?
So maybe Bo, you're able to read this, to give your take on this better than me. But my sense is that at least if I look at the directives of the Supreme Court and I read those as sort of being an expression of what the central government was pushing for in this period, it seems that the central government push was towards a more market-oriented type of bankruptcy system where insolvency was resolved in the way in which it is resolved in the US or in the OECD sort of developed countries. And in that sense, the push also for introducing the specialized courts is in line with this idea of sort of trying to separate as much as possible judicial decisions that should be based on sort of objective assessment of viability of companies from sort of the local sort of preferences of party officials that might have an incentive to delay some of these cases or prevent some of these companies to actually go bankrupt, and sort of that could generate unemployment, unrest, and everything that they don't like. So that is sort of my reading from the this maybe contrasting messages between what the central government was pushing for and the incentives from the local government. It's all very complex and hard to understand for me, because at the same time the central government seems to sort of then reward local party officials that were actually pushing in the direction of sort of limiting their own influence on courts. So all that part for me is sort of a little bit sort of hard to sort of grasp, at least at the moment. But I hope I can get a better view of that.
You have 30 seconds to comment on this last question.
Okay, thanks, Bernie, for the question. I agree with Jacopo. So we see from the central government, so the different regulations, so they want to clear the zombie firms, different regulations and the reports. But however, there's friction between the central and local government, where the local government really more focused on the employment, social unrest. So we see there is tension between central and versus local, and they are seeking a way how to clear up the zombie firms. So I think we will consider the introduction of those specialized court as a way, trying to clear out those inefficient firms. That's our understanding. So they are trying just as one of the steps.
All right, I'm gonna turn my role back to Bernie. Bernie, you're gonna make some announcement for our next event.
Yeah, I would like to thank the presenters, Jacopo and Boli, and also the wonderful discussion by Yueran, and also I want to thank all participants for very stimulating question. It's very clear that this is going to stimulate a lot of thinking on our part for us to understand what's happening. And so thank you very much. In May, ABF-ER is going to have the main conference, so we will have our next seminar for this capital market development in June. Our next seminar will be on June 17th. The topic will be FinTech Adoption and Household Risk-Taking, presented by our colleagues at the SAFE, Shanghai Jiao Tong, and also the discussion would be John Campbell. And I look forward to seeing you in the May conference, even though it's virtual. And also I look forward to seeing you all to reconvene on June 17th when we have our next seminar. Thank you very much all.